Welcome to Money Minds. Have you ever wondered how the rich keep getting richer? That's a question that many of us ponder. Today, we're going to delve into the fascinating world of wealth creation, and more specifically, the concept of compounding. This powerful strategy is one of the key secrets used by successful investors to grow their wealth over time. Imagine a snowball rolling down a hill, gathering more and more snow as it goes. That's what compounding does to your wealth. It's not just about making money from your initial investment, but also earning from the returns that you reinvest. It's a cycle of earnings generating more earnings, leading to exponential growth in your wealth over time. Whether you're beginning your financial journey or looking to enhance your current investment strategy, understanding the power of compounding is essential. It's the key to unlocking long-term wealth and financial success. So, ready to uncover the secret of wealth multiplication? Let's dive into the world of compounding. Compounding in simple terms is the process of making money on your original investment as well as on the gains from that investment. Now let's break this down a bit for clarity. Imagine you have a snowball. As you roll it down a snow-filled hill, it begins to pick up more snow, growing in size as it descends. That's the basic idea behind compounding. Your initial investment is the snowball, and the snow it gathers as it rolls downhill represents the earnings from that investment. Now let's put this into a financial context. Suppose you invest $1,000 in a savings account that offers a 5% annual interest rate. After the first year, you'd earn $50 in interest. Now if you leave those earnings in the account, they too will start earning interest. So in the second year, you're not just earning interest on your initial $1,000, but also on the extra $50. This cycle continues year after year with your interest earning its own interest. This might not seem like much in the short term, but over the long haul, the impact can be significant. After 20 years, your initial $1,000 could grow to over $2,600, even if you never add another cent to the account. That's the power of compounding. And here's the exciting part. The longer you leave your money in the account, the more dramatic the compounding effect becomes. It's like our snowball rolling down the hill. It doesn't just get bigger, it gets bigger at an accelerating rate. Compounding, hence, is your money making more money for you. It's a simple but powerful concept that, when utilized properly, can lead to exponential growth in your wealth over time. But how can you maximize its effect? Let's find out. Time is money, but in the world of compounding, time is even more valuable. Let's ponder on this. The real magic of compounding doesn't just happen overnight, it's a journey. And like any good journey, it starts with a single step, taken as early as possible. You see, compounding is a bit like a snowball rolling down a hill. At first, it's just a small ball, barely gathering any snow, but as it continues to roll and roll, it picks up more snow, becoming larger and larger. So the longer the hill, or in our case, the more time we have, the bigger the snowball gets. Consider two friends, Tom and Jerry. Tom starts investing at the age of 20, putting away $200 every month in an investment that compounds annually at a rate of 7%. Jerry, on the other hand, starts doing the exact same thing, but not until he's 30. When they both retire at 65, Tom, who started early, has amassed a fortune of more than $1 million. Jerry, even though he invested the same amount of money each month, ends up with just about half of Tom's wealth. Why? Because Tom gave his money more time to compound and grow. In the realm of compounding, time is the most potent factor. It's not about how much you invest, but rather how long you let it work for you. It's the silent factor that often gets overlooked amidst the rush for quick returns. But let's be clear, starting early doesn't mean you'll become a millionaire overnight. It's about giving your money the best chance to grow, to take advantage of the power of compounding. It's about understanding that in the world of finance, patience is indeed a virtue. Remember, each day you delay is a day of compounding lost. And once lost, it can never be regained. So, the earlier you start, the more time your money has to grow. Consistency and discipline are your best friends in the journey of wealth creation with compounding. Think of these two characteristics as the fuel that drives the engine of compounding. Without consistency and discipline in your investment habits, the power of compounding may not reach its full potential. It's like trying to win a marathon not by running steadily, but by sprinting and stopping intermittently. It's not the most effective strategy, is it? Consistency, in this context, is about making regular investments. It doesn't matter if the market is up or down, whether it's raining or shining, your commitment to your investment plan should be unwavering. It's about showing up for your financial future every single time without fail. This regular input of money allows you to buy more when prices are low and less when prices are high, effectively averaging out your investment cost. This is a strategy known as dollar cost averaging. And it's one way consistency can work in your favor. Discipline, on the other hand, is the backbone of consistency. It's about sticking to your investment plan even when it feels like everything is against you. It's not panicking when the market takes a dip, and it's not getting carried away when the market is booming. It's about maintaining a steady course guided by your long-term financial goals and not by the short-term fluctuations of the market. Discipline means having the strength to say no to impulsive decisions that could derail your investment plan. Combined, consistency and discipline create a powerful synergy that can supercharge the compounding process. They ensure that you're continually fueling your wealth creation engine with regular investments and that you're not veering off course due to market turbulence or emotional reactions. So, if you're serious about harnessing the power of compounding to get rich, make consistency and discipline your allies. Let them guide your investment decisions and actions. They might not seem exciting, but they are the quiet heroes behind any successful investment story. Remember, compounding rewards consistent and disciplined investors. Now that you understand the power of compounding, how can you make it work for you? Let's now delve into some practical tips that can help you maximize the power of compounding. First, consider investing in assets that provide high returns. The higher the rate of return, the faster and larger your investment will grow due to compounding. Stocks, for instance, have historically provided higher returns than bonds or savings accounts, making them a potentially good choice for a compounding-focused investment strategy. However, remember that with high returns come high risks, so always do your due diligence and consider your risk tolerance before investing. Next, try to avoid unnecessary withdrawals. Compounding works best when you let your earnings accumulate and further generate returns. If you withdraw your earnings too soon, you're essentially stopping the compounding process, which can significantly slow down the growth of your investments. It might be tempting to cash out when you see your investments doing well, but keep in mind the long-term benefits of letting your money compound. Another useful strategy is to reinvest dividends. Many stocks and mutual funds offer dividends, which are essentially portions of a company's earnings distributed to its shareholders. Instead of spending these dividends, consider reinvesting them. This way, you're increasing the amount of money that's working for you and generating returns, further boosting the power of compounding. Finally, be disciplined and consistent with your investments. Compounding is a long-term game. It might not seem like much at first, but over time, the effects of compounding can be substantial. So, even if it's just a small amount, try to invest regularly and keep it up for the long haul. Consistency is key when it comes to compounding. Now, you might be wondering, what if you don't have a lot of money to invest? That's okay. Remember, the power of compounding is not just about how much you invest, but also about how long you let your investments grow. Even small, regular investments can add up to a significant amount over time, thanks to compounding. In conclusion, compounding is indeed an incredibly powerful tool for wealth creation. It's like a snowball that keeps getting bigger and bigger as it rolls down the hill. The longer it rolls, the larger it gets. And the same is true for your investments. The longer you let them grow and compound, the larger they become. So, don't underestimate the power of compounding. Start investing early, even if it's just a small amount. Stay disciplined and avoid unnecessary withdrawals, reinvest your dividends, and consider high-return assets. And most importantly, be patient. Remember, compounding takes time, but the results can be truly remarkable. Compounding is a powerful tool that can help you build wealth over time, so start early, stay consistent, and watch your wealth grow. We hope you found this guide on the power of compounding helpful. The principles we've discussed today are not just theories, they are practical strategies that you can start applying in your financial journey today. Remember that every day, every dollar, and every decision counts when it comes to compounding. The sooner you start, the more time your money has to grow. Staying consistent with your investments, being disciplined about not making unnecessary withdrawals, and having the patience to let your money grow, these are all crucial aspects of maximizing the power of compounding. So don't wait, start today. Apply these principles and watch your wealth grow over time. Thank you for watching. Don't forget to subscribe for more financial insights. Remember, your wealth is in your hands. It's never too early or too late to start investing, and with the power of compounding, you can make your money work for you. So, Get started, stay the course, and let the power of compounding do its magic. Until next time, keep building your wealth and secure your financial future.